Hi there, a very good morning to all of you, depending on wherever you're watching me. This simply talks with another video, and this video relates to a very interesting company, a less than 500 crore market cap company, which is in the rubber space, and it has been performing decently, although numbers have been up and down. But the overall business looks pretty good. So I'm going to discuss about this in a while. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position of any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. And I'm not you can say, certified member of the NSC and BSc. And whatever I present here is for educational purposes. And whatever decisions with respect to investment you take, it's purely on your own discretion. And kindly do consult your financial advisor. And market investment is you can say subject to market risk, so kindly take that on note. This is purely to make you understand as to what different businesses are currently doing and where you can say there is more potential of an upside. So taking this thing forward, I would like to request you all to kindly join my Patreon membership. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. And if you cannot pay on Patreon, you can join me on WhatsApp as well as on YouTube. You can click on the YouTube join button and join there, and you get all the benefits of Patreon right there. Plus, you can also join me on WhatsApp. If you can email me, you can get a 1 year or an annual access on WhatsApp as well. So you can have a membership across the board wherever you would like to take that. So now let me take you to the screener website, and we are going to discuss about this company. The name of the company is Indag Rubber. So basically I'm going to talk about Indag Rubber. It's a 280 crore market cap company, not that big, but has been doing quite an interesting business. It's in the retread, you can say, tire space, and it has been in a very interesting space altogether. So let's just first have an idea about the business overall. So basically, it is engaged in the manufacturing and selling of procured tread rubber and allied products. At the moment, it has around 50% market share of the organized space, which is pretty good if you consider that. Sorry, 25%, 20 to 25% market share in the organized space, which is only 50% of the total, you can say, business that in retread rubber we have. So 50% of the space is unorganized. With the GST coming in and many other factors, I think this is going to be also over a period of time a shift towards you can say the space. They had other businesses, and one of their businesses was in the solar space, which they divested in 2020. And in the year end 2020, they divested the solar, you can say, business to another company. It has very huge capacity, and capacity expansion has taken place over the last couple of years. But they have other businesses like oil and gas exploration, and electric vehicles. They are now into electric vehicles as well. In the electric vehicle space, in order to benefit from this, you can say, move that we are seeing in the EV, and to penetrate into this space, they had a JV with Sun Mobility EV Infra to provide, you can say, it is in the business of swapping stations and smart batteries. So that is what they are going to provide going forward. They are more focused on gaining more market share in the retread space, and this retread tire space should end up doing well with the high inflation that we are seeing at the moment. That people might, that has been happening over the last 2 quarters and may just continue to happen for the next 1.5 years. That people would go for, you can say, retreaded tires, etc., rather than going for those MRF tires. And this is more or less a play on the middle class, you can say, of India. And globally also, with higher inflation, I think retread tires and retread rubber space should pick up big time with the you can say raw material prices going up. So the market cap of the company is around 270 crores. The current price is around 104. The stock has been around the 52-week high levels. Yes, ROE and ROCE is nothing great to write home about, but hopefully things will get better, because once we look at the numbers, then we'll have a better understanding as to where the company is headed, more or less. So till March 22, the numbers were between 35-45 crores in terms of sales, but it has picked up from June of 2022 once the pandemic is over. We have seen that 56 crores of sales in June, 63 crores in September, and 60 crores in December. Now, the last quarter numbers say 60 crores in December quarter. They had a decent growth of 30-35% over December 21. And in terms of margins, this is where things have become better. From 0.13% in December 21, it has gone to 0.34%, 2.7%, and now 6%. 6.3% has been the margin. Yes, in 2019 the margins went up as high as 11%, and hopefully this trajectory should be better off. So we have seen margins go up to even 16% during the pandemic. I have a feeling this margin has bottomed out at around 0.13% in December 21, and things are now picking up. So in terms of you can say profitability as well, things are looking much better, from around 82 lakhs in March 22 to around 5 crores now. Yes, from again December 19 thing, numbers are not up to the market even now, but things are coming back. So I believe that with 1.3 rupees of EPS that they have produced in December, I think they're going to come up with somewhere around let me calculate for the FY23. For FY23, how much would the EPS would be if they can emulate March quarter in the same vein? Then they are going to come up with, or there could be a slight dip in the March quarter, but they will still come out with uh, an EPS which will be closer to 3.5 rupees. So 3.5 rupees of EPS we expect for FY23, and I expect a good 25% growth at least on it. So we are looking at a situation where 4.4 rupees of EPS minimum is possible, and if I take 30% on 3.5, then we are looking at 4.5 rupees of EPS. So I believe 4.5 rupees of EPS is very much possible. If it trades at 35 times, then we are looking at 157 over the next 1 year as a target on the stock. I won't be surprised if the stock goes up 50% in the next 12 to 15 months. But overall, from a long term point of view, from a point of view of 5, 8, 10 years, this looks a very decent investment. Yes, you can keep strict stop losses according to your risk appetite, but you can put in 3-4% of your total shareholding into this sort of a stock. Even if you look at the balance sheet, it looks good. Reserves have gone up in the last 5 years. Reserves have gone up. So 170 crores in March of 17 to around 199 crores. It has been stable. There have been no borrowing whatsoever. If you look at ratios, then working capital days have reduced from around 132 days. We see here in March of 19 to 100 days, 103 days. At the moment, yes, ROCE have reduced sharply, and that is a concern. But hopefully, going forward, once all the expanded capacity come on stream, I think numbers should improve on this front as well. In terms of shareholding pattern, promoters have around 73% stake, which is very good. Even FII is currently hold around 2.36%, which hasn't reduced a lot even in this market mayhem where the market has gone down 2000 points, and the small cap index is at, you can say, multi-month lows. The FII shareholding has not reduced here, where FIIs have sold so much over the last 1 year, 1.5 years. We have seen that FII holding here in Index Rubber has remained stable from 2.48 percent to 2.36. Even DIIs have now got in with around half a percentage in here. Public shareholding has been around 23-24%, which is also pretty decent. And in that 23.5%, there is a decent amount of around 6% holding with HNIs, as we see here. So around 17%, 17.5% is, you can say, free float of the stock, and that is why the movement is pretty sharp. Remember, it is only a 270 280 crore market cap company, so very small company, so there would be a lot of volatility. And do not invest big time in here. You can invest small amounts, say 2-3% of your total holding, and then increase your holding as results come up good and stock prices go up. And over a 8-10 year period, this can be pretty big, the way the performance of the company has been. So my short term target, which means an 18-month target here, is around 150, 160. But I think the stock can go up a lot if things really pertains and goes well for the company. The stock could be a multi-bagger over the next 6, 8, 10 years. So basically, Index Rubber is in a very niche space, and I feel that going forward, the company should end up doing well. So you can definitely have a look at this stock. So this was my video on Index Rubber. Please like and subscribe my channel, hit the bell icon so you get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.